At YM, ATR at lowest value in past 10 bars on 20-minute chart for at YM.
Good evening, everybody. Hope everybody's having a good evening. It is October 21st already. Jeez. All right. Nothing of any great significance in the markets today, which is good. Because as long as we keep in this slow trend, that pretty much keeps us where the strong stocks are going to continue to stay strong and the weak stocks are going to continue to stay weak. So that benefits us in two ways. If you want to have some shorts in your portfolio, they're going to work. If you want to have some longs in your portfolio, they're going to work. The reason for that is, as long as there isn't any dramatic change of investor sentiment, like big, huge days like we saw here, notice what happens after the big, huge days. The trend goes in that direction. Big, huge day, trend goes in that direction. It comes back to the very simple fact that when the investor sentiment changes and you see a big signal or candle formation, that pretty much tells you that there's been a change of investor sentiment, and it's usually going to go or continue that trend until there's another big reversal. And where's our likely target here? Obviously, the top of the trend channel. So that's right, 10 more days to Halloween. I'm not even sure where I'm going to be. I think I'll be in Pittsburgh then. So now, is today a lethargic day in the Dow? Yeah, down 7 points. But it comes back to the very simple analysis that if the Dow's down 7 and the NASDAQ's up 6, 6.5, 6, that pretty much tells you there's no change of investor sentiment. It's just kind of shifting of funds. So that allows us to take or get good opportunities to get into some good trades, because as long as there's not any major change in the market in general, that means each specific chart is going to continue to bring up that investor sentiment. It's not being affected by the market trend. Now let's take a look at a few other things. Crude oil, as we can see, is not in an uptrend. It's still heading down. I would suspect they're coming back down to fill this gap, which puts you right here at the 200-day moving average. Let's see what natural gas has been doing. It's in a trend channel, and observe the obvious. Where did it fail? Right smack dab at the 200. Now we're right smack dab back at the 50. So we need to see what they do with it tomorrow, but I would suspect they're going to bring it back down to the bottom of the trend channel. I'm moving Mike. All right. How's that? That sound any better? I don't know why maybe it's, okay. All right. I think it's just because I keep knocking the mic away from my mouth a little bit. All right, let's see what else we got. Let's see, did we do gold? Gold is going nowhere. Slow downtrend. I wouldn't be trading gold right now.
On 80 tick
even
chart.
if we make
Simple
the
moving average 50.
chart
Turning
more,
down. On at YM.
it's still just telling us we're in a slow downtrend. Nothing that I'd want to be trading right now. Silver, somewhat the same scenario. They're just not trading it very active in any direction one way or the other. I've shorted cotton today because notice where it failed. Notice it tried to come back up, but very indecisively. Then we had a sell and another sell right here at the T-line. Did a doji. Makes this very simple. If they open this lower tomorrow, you want to be shorting it. It'll probably wave 1, wave 2, wave 3 to the downside. The other grains, Soybeans still picking up strength, and notice what it's done. Kind of a double bottom right here on the 200. Came back up through the T-line, and now continues to act positive as long as it stays above the T-line. Wheat. So almost gotten to the 200-day moving average. This one you stay long as it stays above the T-line. Looks like they've done a little bullish J-hook type pattern. That might have enough strength to push you back up through the 200. What else do I got here? Oh, the dollar. Dollar is just kind of sagging. Not going in anywhere in any great hurry, and that's with all the currencies right now. The yen, as we can see, this is about as boring a trend channel. It's in the wedge, just hasn't broken out, and you couldn't trade it one way or the other. British pound doesn't look like it's going anywhere in a great hurry. It's in a slow uptrend, but they're starting to sell it off before they got to the recent high. That might put it in a sideways mode. And what else is there? The euro. Let's take a look at the euro. Same scenario, kind of very slow uptrend, but not anything that I'd want to be trading. And I guess that's about it. Oh, interest rates. 10-year note slowly moving back up, which means interest rates are slowly dropping again. So let's see. We were going to try to do a little bit on stop losses tonight. So let me take a kind of quick look. When are people usually going to take profits? When they've got big profits. So here's a case where Scotty gapped up through the off the slow curve type pattern. Moved from the $40 to the $60 range in a matter of a week and a half, 2 weeks. Today, they opened it up here. Now, we're in the overbought condition. We've had a strong run. And they gap it up. And what's our kind of a rule? Now, they also gapped it up here right in this area and did a doji. But that was a little bit different. They just broke out through a resistance level, gapped up, did a doji, made it very simple. If they'd opened it lower, they were bringing it back down. Next day they opened it positive, took it up. Probably an effect of breaking out through this level, plus the effect of doing a gap up out of this resistance level. Why was today more compelling to start taking profits? Because look at the distance you are from the T-line here, which wasn't unusual. But look where you were as far as distance from the T-line here, about twice, if almost 3 times as high. So this made it very easy. When they gap up in the overbought condition, it was nice when they were taking it up, but when they started bringing it back down, and they did a doji most of the day, that's when you start taking profits. A Novus gap. I wouldn't know a Novus gap if I tripped over it. So, essentially, when you see a gap up in the oversold area, especially that far away from the T-line, take some off the table. I mean, I had huge profits in some option trades here, as you can imagine. But what happens when we see something going up and going up?
Price crossed below.
Our mind says, man, we're going to get rich from this one. It's just going to keep right on going. But using the signals and the logic that's built into candlestick analysis, if they're gapping it up in the overbought condition, they'd better take it straight on up. You always put your stop back where it opened, because if they come back down through there, it's time to get out. Worst case scenario is you put your stop at the previous day's close, because if they gapped it up and they're able to bring it back down through that level, that's not a good sign. Worst case also is you get stopped out up here or out here, they bring it back down here. If they bring it here and start taking it back up, you can always buy back in. That tells you that trend's still in progress. I would venture to guess that the high probability situation is going to be they're going to open it lower and eventually bring it down to the T-line.
So there's a couple elements that you want to use for stop losses for taking profits. That gap up in the overbought area, number one, and two, the further they move away from the T line, the higher the probability it's going to come back and test the T line. We could see that over here in Apple. The reason we want to know what the signals tell us is so that we know what to expect. A doji followed by a bearish engulfing signal, left-to-right combo, and a close below the T-line. That's where you should be setting your stop loss. It shouldn't be closing back below the T-line. So that's just kind of a simple rule. Obviously, too, where did this sell signal occur? Right about the same level the sell signal occurred over here. So don't be afraid to take some off the table if you've got good profits and you're away from the T-line and it looks like you're getting sell signals. More than likely, they're going to come back at least to the T-line. The open of the previous day is the, let's see. I don't understand. GJ said again, did I mention the open or the close of the previous day? So this was a case, too, where if you start seeing a second sell signal at the same level you saw the first sell signal, anytime you see a close below the T-line, if it's a definite selling day, close out the position. We kind of saw that in Eagle. Yuck. Eagle, where we had a bearish engulfing signal that closed right on the T-line. Made this very simple. It had to open positive and trade positive to stay in it. The fact that they opened it lower, Tom, the T-line is the 8 exponential moving average. The T-line is a very effective trend analytical tool. That if you see a candlestick buy signal and a close above the T-line, you can stay with it as long as you don't see a candlestick sell signal and a close back below the T-line. The caveat to that is the further you move away from the T-line, the higher the probability they're going to come back and test it. So if you see a candlestick reversal signal like a doji away from the T-line, well in the overbought area, more than likely, if they start selling this off, that's their next target is the T-line. Is it going to stay there? We have no idea. We've got the J-hook pattern potential, but I'd rather come out of the trade, know that it didn't come right back down, and be able to buy back in when the chart tells me it's time to buy back in. So if I'm up here, I'm setting my stop loss someplace, and this is what you should do every single night. This is why I tell people don't have a whole lot of positions on. My average, again, for a portfolio is somewhere around 10 positions. The reason for that is you get 20, 30 positions in there. Number one, they're not, each position isn't that important to you because you only got 5 or 3.5% of your position on any, let's see, no pink, oh, that's right, sometimes I do, sometimes I don't, depending on what the chart is. But again, now I forgot what I was saying. This is just, 10 positions. Because I can look at my positions every night in a matter of less than 50 seconds. Say, all right, if this one opens lower tomorrow, I want to close it out. I already have a game plan. That gives me two better trading techniques. Number one, it keeps me from saying, oh, man, this is open lower. Should I get out or shouldn't I get out? It tells me the night before when I'm sitting there rationally looking at it, saying if they open this lower the next day after a doji, more than likely they're going to take it back to the T-line. So also more than likely, I've found another chart situation that might look something like this that I roll over into. I don't have to make a decision the next day, and so we take the emotions out of our trading. So here's a case today where we had a bearish engulfing signal. It needed to open positive and trade positive. If it opened lower and traded lower, we wanted to be out because what was that telling us? That told us this breakout area didn't occur and the T-line's not acting as support. this was a bad trade to be in. So got in yesterday, got out this morning because this wasn't the right direction. Now, is that the right thing to do? I mean, it's not the right thing to do. But one of the biggest emotional problems that most of us have, I say most of us because that's what was always my problem, is that if I bought something because it was supposed to go up, it just killed me ego-wise to think, man, how could it go opposite the direction I thought it was going to? I've got to come back out of this trade. But I hate taking a 3%, 5%, 7% loss on a trade. But I'd rather take a 3, 5, 7% because it's telling us it's not going up than take a 25% loss 3 days later. How long do you wait to see if it isn't going to pull back up? Oh, Melinda, if it gets near the end of the day and I can see that it's doing some sort of sell signal, there's, again, the basic simple rules of some of our signals is if it opens lower after a bearish engulfing signal, that's confirming. If it opens lower after a doji, especially in the overbought condition, our simple rule is going to move in the direction of how they open it, especially in an overbought condition. I don't have to wait too long to see they're pulling it back. If this opened lower and started pulling back and I closed it out, that was the right thing to do. If it turned around and started going right back up again, I can always buy it back. I'd rather give up a little bit of profit than hold on and give up some of my gain. I'd rather give up potential profit than hold something that's going to take back some of the gains I've gotten. Because of the math. I would rather not make as much money more often than to try to make more money and give some of it back, because every time you give back a buck, you've got to figure out how to make that buck back and then some. I'd rather not lose the buck and buy back up here to make additional bucks with the bucks I already have. I hope I said that correctly. I don't think I even understood what I said. All right, so there's situations like Scotty. There's when you get that gap up, especially when you're up in the oversold area, if they gap it up, you better pick a spot that says, if this comes back to a certain level, in this case, I'd have picked the open or the close of the doji. If it came back down through that level, that tells me exactly what's happened after they gapped it up, especially in the overbought area. It's time to be out. That's where I'd set my stop the night before, or knowing that if it opened positive the next day, I need to have a stop somewhere. If it opened lower, I better have my stop at the bottom of the doji. Let's see. Point of clarification. Usually, do you close in the last hour of the day, or do you decide overnight and close on the open next morning? Don, depending on where the close is. Let me see. Oh, let's go back to the Apple chart. If I saw that it closed below the T line, I'll probably close out the position. What's my worst case scenario? It opens positive the next day and goes up. I can always buy it back. All right, so I've given up a little bit. On the other hand, if it closes right at the T line, like Eagle did, then it hasn't closed below the T line, our basic rule. So I've got a very simple strategy for the next day. It has to open positive, trade positive, staying above the T line. If it opens lower, I close out the position.
YM ATR.
Yes,
at
I will
lowest value
usually
in
close
past 10 bars on 20-minute chart for YM.
if it closes below the T line. If it stops right on the T line, I'll wait till the next day. But if it opens lower the next day, I close it out. All right, let me see what else we got here. I think it was DONT. This one. Something like this. A lot of people say, well, where should I be back out of the trade? Here's a nice buy signal right here. Let me make this bigger. It's even a little doji gap up after a series of doji, a cradle pattern, which should give us this type of move, strong up move. Next few days, indecisive. Now this is what would start getting me a warning. It's indecisively trading. This is a strong buy signal. We should be moving in this direction. As soon as they would close it back below the T line, that would be my stop. That would be, say, that's where my stop is, a close below the T line. So there's going to be times I get into a trade and it doesn't work. As a matter of fact, probably about 1/3 of the time, you're going to get into trades that don't work. But the point of investing is to get out of those trades that aren't working and move to something that is working. Fortunately, on a visual basis, candlestick signals give us very simple rules, and the T-line is one of them. If this one was working, the next day it should have opened higher and closed higher, traded higher. The fact that they closed it back here tells me that's number one, closing below the T-line, and number two, that's not the trajectory I would want to see a bullish trade. Why didn't you wait for a sell signal and a close below the T-line? Because it was already, it closed right on the T-line, and it already told me I've got a sell signal that failed this level. The best case scenario was it would open positive, trade positive, doing a doji sandwich. I've got a bearish engulfing signal closing right on the T-line. If it needs to be a positive open to tell me that the signal is not confirming, you can scratch the T-line and take it right out of here and say, what do we don't want to see after a bearish engulfing signal? We don't want to see it opening lower and trading lower. You add the T-line to that factor that they're now trading it back below the T-line. That's more compelling to say, get out immediately. What's the worst case scenario? You close it here, it goes down, and then it comes back up through. You can always buy it back, because what's it basically telling us if they take it down and bring it back up? It's still telling us the bulls are back in and they're going to take it back up above the T-line. There's many times where I'll close out a position, it does a big hammer type signal, and I'm buying it back the next day as it's opening positive. So I gave up a little bit, but I gave up the risk of owning something that might be heading in this direction. Let's see. And here's another case too. If you see something where you've got big, huge profits, for example, let's say you got in right here and 3 days later you had huge profits and they were taking it up here, it's still no sell signal. But notice how far away you are from the T-line. What do you think is going to happen if people have got huge profits? Well, this is where I flip to the 10-minute chart, and I will see if this is going to work or not. I'm going to guess that this was on that day. It might even have been on this day. When they started coming back down through the T-line, that's when I would start taking profits. Why? What difference is this on this T-line here on the 10-minute chart? Nothing major except we're below the T-line, but we can also evaluate that this stock has just skyrocketed way up here. If it's coming back below the T-line, it's probably time to take some profits. Yes, the T-line works in any time frame, whether you're looking at the 1 minute and the 10-minute or the daily, monthly, or whatever. The T-line is very effective in any time frame. So anyways, when I get a situation where I got huge profits, that's where I start flipping to the 10-minute chart. Because worst case scenario, the 10-minute chart says a sell, I get out, and then the 10-minute chart turns around and as it comes back up, I can always buy back. But the 10-minute chart, in well overbought area, that far away from the T-line, tells me the probabilities are it's time to take some profits. Which time frame are you using to first see that candle signal? 3 months? Not any, just the daily. Now, I happen to use a chart that's about this big, only to see what has happened in the recent past. So it doesn't really matter signal right there. So this is the information that oh, no chart. Uh-oh. Oh, something did fail. Can you still hear me? Okay. All right, let me see what happened here. There was something about something failing. All right, let's try this again. There we go. All right. So why was there a difference between this chart and this chart? We had a bearish engulfing signal. If it opened lower, what was it telling us? It's probably going to come back down to the T line. We needed to see it open positive and trade positive to tell us that the bulls were still there. Same scenario right there. Dark cloud. We needed to see it open positive. If it had started trading back below the T line, that would have given us two indications. One, that it was trading below the T line, and two, was telling us our upward trajectory is gone, that it was time to turn around, or that it had turned around. If you're still in Eagle, remember, each time, this is the proper thing to do, is to close it here. But if you're still in it, now what do we analyze? Well, we kind of analyze that it's still supporting here. Tomorrow, I definitely want to see it open positive and start trading positive, telling us this support area is working. If it opened lower and started trading down, I'd close it out, because what's that tell me? It already tells me they're bringing it back down to the 50. No sound, but the video is okay. All right. Yep. For you new members, we put out stock picks every night. Oh, and I probably Wednesday night we're going to be doing kind of a quick review of option strategies, because we're setting up apparently a new service on the site, because we're getting so much requests as far as option trades, and there's so many different different strategies people are looking for, that we're going to start spending a lot more time on setting up option strategies for the people that want to do a quick scalp, as well as the swing trade type option trade and the longer term option trade. So we're going to be putting a lot more effort into that Wednesday night. And then Thursday night, we're going to be doing a session. Ruh-roh. Okay. Let's see. I have to take this. Smoke them if you got them. I'll be right back.
Back below Kin June. Buy stop canceled.
Okay, where am I? We did VISN. Let's see, BODY. There's another example of, let me see if I can get this. Another example of where you had a nice buy signal and then closed back below the T line. It was time to get out. It had to, and this was a perfect example of where the chart was looking like it was supposed to do what it was supposed, or doing what it was supposed to, but the fact that they closed it back below the T line should be an immediate indication to close out the position. Anytime you're below the T line, the probabilities are that you're heading down. Anytime you're above the T line, the probabilities are you're heading up. Now, in this chart, if I make it a little bit smaller, the reason there was more evidence to get out of this right away was the fact that the chart was telling you which direction the trend was going already. So remember, the trend is your friend. We're just trying to find buy signals that tell us the trend is now altered, But if it comes back and closes below the T line, that's perfectly more evidence that the downtrend is in progress. We're going to say about Thursday night. Well, Thursday night is we're doing a session for everybody. So it's going to be kind of somewhat the same session, which everybody's invited to come to again. So again, we're going to kind of roll out, taking a lot more of candlestick signals and applying them to different option strategies. Teresa, this is the 8 exponential moving average. We call it the T line, known as the trigger line. And a very simple strategy. If you see a buy signal and a close above the T line, you're in an uptrend. If you see a candlestick sell signal and a close below the T line, you're going to be in a downtrend. All right. Tom, I don't cover Forex trading. We do cover some of the currencies, but you can use Forex trades using candlesticks just as easy as any of the other trading anything else. Remember, candlestick analysis or candlesticks are the cumulative knowledge of everybody buying and selling whatever trading entity at that time. And so it works just as well on Forex. The only difference on Forex, Tom, is that you don't have a daily open and close because it's flowing, but you can go to the smaller time frames like an hourly chart or the 15-minute chart and do just as well. How much time at the open do you give to determine the direction of the move? I've heard at least 15 minutes after the open. RV, some people say 15 minutes, some people say 30 minutes, some people say 45 minutes, some people say that the amateurs buy in the first hour, the pros buy later. All sorts of things. I don't give a hoot. If I see a candlestick buy signal and the market's moving the right signal and the signal's confirming, I might be buying on the open. On the other hand, if the market's opening lower and the stock's opening higher that I want to buy, I may wait 5, 10, 20, 30 minutes to see what the general market is doing. What about the idea that if the T line is curving up, you can wait one day if the price closes below the T line? But if the T line is flat or down, sell immediately on close below the T line. Gordon, never even looked at that type of concept before, but that's the reason we're all here. That's a good test. I hadn't even ever thought of that. And where can I find a description and summary of what you are using in these charts and what your recommendations, conventions are? Each night, Mongo, we put out 2 or 3 stock recommendations. And just real quick, the red line's the 200, the blue line's the 50, and the gray line's the 20. Simple moving averages. The reason we have that, because every major money manager around the world uses those. We have the advantage of seeing what's going on at those levels because we can see instantly what's going on in investor sentiment based upon the signals. The T-line is a very effective trend analytical tool, and these major moving averages act all kind of as self-fulfilling prophecies because everybody's watching them. Whereas the T-line is probably more of a natural number, like a Fibonacci number. Very few people use them, but they work effectively. Let's see. So here's a case, too. When you see a huge buy signal, and then you see it close back below the T-line, that tells you that signal did not work. Same scenario over here. If you see a buy signal and you run into resistance, if you see, just use the doji concept of it's going to move in the direction how they open it after a doji. They took it down. That told us very simply there was indecision at the resistance level. That's why we want to know, or why you want to know, which signals tell you about indecision. A doji, a little hammer, a little inverted hammer. All those are indecisive trading. compared to the big bullish engulfing signal and the bullish Harami. Those tell you that there's more information or more powerful information as far as a trend direction. So here's another case where had a nice buy signal set up, but a close right back below the T line. What was that confirming? That this downtrend was still in progress. So observe what the chart is telling you, and then observe what a buy signal should be doing. It should be moving this direction. It shouldn't be closing back below the T line. Is there more risk buying stock when the stock is below the 50 or the 200? No. Because if you're this far away from the, let's see if I can, no, that's not the one. Oh, we put a recommendation on MLNX because it did a scoop pattern. Where was the first target? It was below the 50, but the target was the 50. Then it kind of hovered here and done another little slow curve. Where's our next target? We're below the 200, but that's where our target is. So, no, at some point, if there's a reversal in a stock that's well oversold, it's well below the moving averages. It's going to come back up to those moving averages. All right, let me see if I've got some more here on kind of stop losses. Again, another example that if you're in the overbought condition and you see a doji at the top, it opens positive, it should be moving in the direction. If they open it and immediately start selling it, they should not come back down below this level. Because if it does, what's it creating? At least a bearish engulfing signal. What else? Let's see. These all had something that I wanted to illustrate. Another case of nice steady uptrend. It shouldn't come back down through. Notice that they've held up above the T line. Now we've had 4 indecisive trading days. This is where I'd have my stop. I wouldn't want to see it come in this direction. Now, what would be the worst case scenario if they took it down through the T line? They brought it back up. You could always buy back in. I'd rather be buying knowing that the bulls have stepped back in and pushing it up than wondering whether I'm holding on to it and the bears are going to take it all the way back down in this direction. So there's really nothing dangerous or detrimental about closing at a level that tells you it's time to get out of the trade. And if it comes back up through, getting right back in, even if you have to pay higher for it. If I've had a trade like this, and it's moved up tremendously, and then it started selling off, I'll take my profits. And if I give up a little bit of the profits to continue the uptrend, that's no big deal. I'd rather give up some profits than hold on to additional losses. What condition one can use in TC for day trading? I don't understand what that's asked. Why are only moving averages used for targets, but not major points of horizontal resistance? Larry, they are. If you see a horizontal resistance and it breaks through, that's also the case. So in this case, notice we have the kind of little slow curve, gaps up through the resistance level. Basically, we want to see what the investor sentiment was at the resistance level, whether it was this type of trend or a trend breakthrough, or whether it was bouncing up off moving averages. What we're essentially doing is we're seeing what's happening in investor sentiment. Then we can use any other application we want to see, all right, is it breaking out? Is it hitting a Fibonacci number? We can see immediately what's going on in investor sentiment. Now we can go back and see what's confirming that. Daryl, I don't pay attention to volume. If volume on a day like this is huge, or on a day like this is huge, telling me there's a lot of the weak selling into the strong, or the strong is buying weak stock, or vice versa up here, where there's the strong are selling. Yeah, that volume on a volume spike just adds any credibility of the that there's been a major change of investor sentiment, usually at the bottom or at the top. How do you use the 10-minute chart to refine, stop, or buy? Ernie, that's a whole session, and we're going to do that session here pretty soon. Once I get up to Pittsburgh, we're going to be doing a couple more Sunday evenings because we're running out of time during the week. And then we'll probably be doing some Saturday morning sessions where we can go into a topic much longer, maybe for 2 or 3 hours at a time. And Pat, and that's one of those sessions we do on a Saturday morning, is showing how to scan for the best trades each day. How to day trade using these lines. Same, you can use RK on any time frame you want. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination. Tom, yes, we do have the basics sessions for beginners. So we'll be going, we've been a little bit lax here recently only because I'm in the process of trying to pack up 2 houses and head north. RV, yes, we do option seminars that start from the very basics and work our way up through over maybe a 3 or 4 training session time frame, where we might do a Wednesday night for 4 weeks in a row, starting from the basics, and then which stocks to use to put spreads on, which stocks to use to put credit spreads on, that sort of thing. Okay, what else? Let's see, I'm getting way off track here. Let's see, TW. Oh, that was TW. All right. And BRJI had an important,
That YM on 80 tick chart. Simple moving average 50. Turning down. On and YM.
Apparently I wrote something wrong here. All right, let's take a look at some, how do you differentiate strong stock from weak stock? Well, strong stock's going up, and weak stock's going down. Yes, I think the option services will be priced separately. Just because there's going to be a lot more input added to the options area. Do you day trade stocks? Nita, I used to. Oh, that might be it. EJRI. Yes, okay. This had again, some illustrations of it coming up above the T line. And so if I was buying in here, which would be the logical place to be buying, as soon as it closed back below the T line, you close it out. I think that's what I was trying to illustrate on this one. That also. We will be covering weekly options. I'm still getting accustomed to weekly options myself. And if it's not me showing weekly options, it will be somebody that knows more about weekly options than me doing one of our sessions. Thank you, yes, Canada Trader. Would you have gotten out of HIMX? Let me take a look. That was earlier in the day in the chat room. Somebody asked, and I said, yes, you can be buying this, and you put your stop at where it opened. It shouldn't come back down through that level. Linda, I think, yes, the current subscribers, if they want to get more information on the option picks, but it will be discounted for the members area, or for the existing members. RK, we'll get to individual stocks here in a little bit. We haven't even gotten to the ones we were looking at. We recommended GGAL because it was doing the obvious. And notice how it comes back up through the T-line, came back down to the T-line, came back up. So we're still in an uptrend. So this one you want to continue to hold. And RMTI is another one that's done kind of a J-hook pattern. Got soggy here. So this tells us, this is one where you'd sit and say, all right, what do I do with this one tomorrow? Well, if this is staying in an uptrend, it better not come back down through this level, because if it starts selling in that direction, where's it coming back to? Probably at least the T-line. But if it comes back to the T-line, what's it tell us about this top? It told us it topped out right at the same level it did before. We probably want to be back out of it and just wait and see whether it comes back up again. Let's see what else we got here. TSL, another one that, even though it got soggy, it never traded back below the T-line. Well, shows what's. So we've had an up move consolidation, and then we've got the doji. So this one will be on a good uptrend, especially if it opens positive tomorrow, because if it opens positive, it's telling us it's moving in the direction of how they open it after doji. Breaks through this level, we're in another wave to the upside. Now, the waves are healthy because this tells you we have a move, profit taking, a move, profit taking. As long as you have the profit taking in the trend, you're going to still have some good strength. Okay, oh yeah, I can do that. We're going to see if we can do this. Add a study, moving average. See if I can do this. We're going to add the 3T on here because that's going to be another session here pretty soon on how to use the 3T along with the, so we give this kind of a green color. We want to make it 0.7. Apply. Okay. All right, there's our 3T. 3T, we're going to be doing sessions on how to use the T-line, the 3T, and how to use entry and exit strategies using the 1 minute, 5 minute, and 10 minute chart. So really kind of fine tune how to get in and out of trades. All right, we also have been holding NBG because this has a nice big base action, and there's your slow curve. So where's your next probable target? Right up here at the 200. So got a nice slow curve coming out of here. That's where it means something's building up, and that's where you usually see the big pops. The 3T is the 3 exponential moving average, which we've been doing tests, Teresa, recently on that if the T-line is a very effective trend analytical tool, sometimes you get a situation where the price not only moves away from the T-line, which is a very effective trend analysis, but then the 3T becomes more effective to tell you when they're going to start bringing it back down to the T-line. So it allows you to take profits a little bit earlier on fast-moving stocks. Let's see, we did KNDI. KNDI has got a nice little J-hook, and notice once again they couldn't get it back below through the T-line. This one I wouldn't be afraid to be buying on positive trading tomorrow. Is it too late to buy NBG? No. You just have to be, it was better to buy it down in here where it was bouncing. Let's make this big enough where we can all see it. It was better to be buying it down in here in this area as it was breaking out. But if you're buying here at the $6 range and it's got the potential going to the $8 range, that's still a good 35% upside potential. You just have to be a little bit more diligent as far as seeing a sell signal and a close back below the T line. CSUN has also got a good looking chart. Slow curve. We're back up here to the breakout area. Notice the doji sandwich, and remember, what is our results after a doji sandwich? More upside. So if we can anticipate more upside, got a wave 1, wave 2 going into wave 3 that should have the magnitude of that move right there. Let's see. On Kendai, which we were going to look at anyways. Where would you put your stop? Right now in Kendai, with this J-hook type pattern, the T-lines that come up, I'd still use the T-line or close below the T-line as my stop. Would you buy CSUN greater than close or greater than today's high? Greater than close. Remember, the Japanese rice traders, the reason they box in the open and the close is because that's the final decision between the bulls and the bears. The rest of it is just noise. So this open or this close right here, if they open up positive after the close, that's the important factor, not the high. Okay. The simple moving averages are used because major money managers around the world use those. The exponential moving average for the T-line, it just seems to work. It was done by one of my first private training session students. It came from Anchorage, Alaska to Houston, went back to Anchorage, Alaska, got back to me a couple months later as he was trying to figure out how to make everything work better. He said, take a look at this. It seems to work very effectively. Now, the 8 exponential moving average is usually used a lot more for traders that are trading commodities, but it works very effectively also. So you can use the 10 simple or the 8 exponential. They're all fairly close, but the 8 exponential seems to work the best. All right, let me see what we got here. GTAT is one that we've been mentioning in the chat room. There's that little J-hook pattern, gap up. And where are you? You're still in this trend, so there's good possibility you could move back up to the top of the trend channel and continue from there. Netflix, a lot of people say, would you ever hold stock through earnings or into earnings? Remember, the charts are the cumulative knowledge of everybody buying and selling during a specific time frame, which tells you that if they're buying going into earnings, that probably people that are a lot closer to the company know more than we do are still buying. So as we saw today, they did a doji sandwich, which meant if they opened it positive after a doji, they were going positive. If they were going positive, they were breaking out through this level. I think the stock, where was it last trading? Up here around 394 or somewhere in that range. So they've broken out through this trend channel. At 394, okay. All right, and so again, that comes back to illustrate that I will buy or I will continue to hold going into earnings as long as the chart tells me that you want to continue holding it. Because again, that's the cumulative knowledge of everybody buying and selling. All right, and then let's see. JSO was another good-looking chart. One of the solars. Again, the slow rounding bottom tells us they're going to come back up to the top of the trend channel. And as you can see, this is healthy. They take it up, they consolidate. Take it up, consolidate. That means the uptrend will usually last a lot longer. And EZCH. DCH. There's that slow curve with a gap up. I would definitely be buying this one on positive trading tomorrow. Even though you're getting up to the overbought area, whenever you see that slow curve breakout, that tells you somebody that this is building up to a pop, which usually will give you some good profits. Very short-term profit potential. Let's see. This one had a point to it. And I forgot what I was illustrating on this one. Oh, another doji sandwich right here at the resistance level. If they open up positive, what's that telling us? Doji positive tells us they're going to trade at positive, which means they're not going to resist at this level anymore. So it becomes a very high probability. Notice how today's magnitude of that trade was the same as this right here. That's the doji sandwich. So if you use that doji right at a resistance level and it opens positive, you've got a good possibility of another strong trade because it is breaking out after that day of indecision right on the resistance level. All right, here's another nice little scoop pattern. Started with a bullish Harami right smack dab on the 50, another piercing signal. And here's the type of pattern a lot of people say, oh, should we get out? There's going to be selling in an uptrend. So unless it does a reversal signal confirmed and your stochastics get to the point where a sell signal becomes more dominant, you stay long as you can see what type of pattern it's setting up. Do you use the cross above the 50 and moving average as a positive sign? No. I use the signals. The signals are the criteria for buying or selling. Everything else is just confirming indicators or possible resistance areas. TiVo. TiVo also did that doji sandwich type setup right here at a resistance level. Basically tells us wave 1, wave 2, going into wave 3. So when they break out through these resistance levels, it just gives, we have the opportunity to get in immediately based on the fact that we know what should happen after a doji. Another doji sandwich type, and look at the pattern, a slow curve breaking out to the upside. Wave 1, wave 2, going into wave 3. What was GNTX? Ego, another one that they were asking about in the chat room. There's the kicker type signal. Remember, the kicker signal is your strongest reversal signal. And the fact that they gapped it up through the downtrending resistance level tells us there's definitely been a change of investor sentiment. This one I would have no qualms about buying on positive trading, because where do you think the next target's going to be? Right up here to the 50. Do you count your waves according to Elliott wave, or do you have your own rules? No, I just usually count wave 1, wave 2, wave 3. Then if the trade is good after that, wave 3 now becomes wave 1. I look for wave 2 and the next wave after that. And let's see, MDXG. This is your high probability trade setup. It came out of the slow curve or fry pan bottom. Where did they really resist the first time? Right here at the 50. Notice what they couldn't do. They couldn't really close this back below the T-line, and this is called the T-line crunch, where they push it up through the resistance level. Notice where your doji was, right here at the highs. Made it very simple. If they started trading this positive, you wanted to buy immediately because you had a doji sandwich, which meant this level wasn't going to act as resistance anymore. Where's your next target on this? Probably testing this area right up here. Doesn't matter, HA. Wave 1 is just where you can see the see where the first buying was. So if you didn't get into it, it doesn't really matter. Let's see. What was the question? Flutter kicker? No. Difference between This is a doji sandwich. The difference between a flutter kicker and a doji sandwich is this candle's green, doji green. Now, if this candle was red, and then this was gapped up above the open, that becomes a flutter kicker signal. Let's see. First Solar also had, now this is kind of what we call a trend kicker signal. Notice we had a dark day here. Then the next day they gapped it up above the previous day's open and went positive. Trend kicker is still a very strong indication the uptrend's still going to be in progress. And VHC has something. Oh, there's that little scoop pattern, which was, we were trading one right now. It was coming off a scoop pattern. I can't remember which one it was. Oh, let's see. Oh, Sino. This was one of our recommendations because here's our little scoop pattern. Scoop pattern is a buy signal, left-right combo, close above the T-line. Where's the resistance level? It's usually where the accumulation is, except if you can see that accumulation was just flat, now you basically have a scoop. And what did this tell us? We had another doji sandwich, which told us we were going higher, which meant if we were going higher, we were going through the 50 and the handle. Our likely target right now is at the 200-day moving average. RV, this isn't, remember, this is all just common sense put into a graphic depiction. So you stick with it for 30 days, you're going to start understanding where the high probability trades are setting up. Wave 1 doesn't start at T-line, or can it start below the T-line? Wave 1 is just a count. We'll get to another one where we got Wave 1, Wave 2, Wave 3. Yeah, don't get all boggled up on where a Wave 1 is. What you're looking for is if it comes out of Wave 2 going into Wave 3, you're going to see how big Wave 1 was. Here's another one, the fry pan bottom, gap up through the resistance level. What's that gap up through the resistance level tell us? They didn't give a hoot that there was a resistance level. They were going higher, and everybody that saw that they were gapping through this level started piling in. So that's why we want to be ready on these slow curve type situations to be ready to buy immediately when they break out through those levels. Where's the start of a fry pan bottom? And where you can kind of tell that the fry pan started. Let's see, what is some of our fry pan bottoms? I'll come across ones here. Jay, hold on for a second. Let's see, GAS. This is getting set up for a double doji sandwich. Notice on the consolidation, it's very indecisive. If it opens positive, they're going to take it up in probably the same magnitude as this. If they do that, they're breaking out through this level. Now, this is what I call Wave 1, Wave 2, Wave 3. I can see right now, this is about the magnitude of Wave 1, which was approximately going from the 44 area to the 47 area. That means this move should be 3 points, so I can pretty much measure where the upside. So if this is Wave 1, you don't have to see where it started. You just find the bottom and find the top. That's about the distance of Wave 1. That'll be the distance of Wave 3. Let's see. John, that is a good question to make a very poignant point. That was on CRUS. If we're buying a pattern that is breaking out, no, it's not too late, because where's our potential target? Let me make this smaller. We've got a potential target of coming all the way up here and getting back to the top of the trend channel. So for years, I hear people saying, oh, this has moved good. I'm going to wait for it to pull back. So what's the rationale for waiting for it to pull back? That means you're going to buy something where the sellers are starting to knock it back down, which means the force to the upside isn't there. And why are you waiting for it to pull back? Because we think as soon as it pulls back and we buy it, it's going to turn right around and go right back up again. I want to be buying into strength. I want to buy with the strength. If it's starting to pull back for some reason, that means does not have the strength. I don't want to see it pull back. I want to see it to keep moving in a strong trading. Do you offer auto trading service? No. I just offer education that once you learn how to use candlesticks, you can trade anything you want to with a high degree of probability you're going to be in the right direction at the right time, no matter what you're trading. Let's see. And so so this is what we're looking for coming out of scoop patterns. If we see a scoop pattern, this is the slingshot effect we'd like to see. Are we always going to catch ones that move from 3 to 7 in 4 or 5 days? Definitely not. But when we buy a scoop, we know the probabilities of being in a strong uptrend are dramatically in our favor. Okay. All right. I've talked way too long. My half an hour has been up for, well, is there any more general questions? What about pullbacks on an intraday chart? Yes, you can do that. If you know that your uptrend is in progress, I'm trying to think of which ones. There will be a lot of times where, and I'm trying to think of which one to look at. Trying to think if there's something. I don't see any just yet. Netflix today. No, not even that. There'll be a lot of times, I'm trying to think of which, a lot of times, let's say you see the buy signal break out. The next day they open it and they trade it all the way back to the T line. All right, that's where if you're an aggressive trader, you can take your 10-minute chart. If you know the daily has come back to the T line, you take your 10-minute chart, see if it's starting to turn back up. Basically what that tells you is they've consolidated back to the T line and they're going to take it back up again. How to choose 10 best stocks for trading. NS, I don't trade specific stocks. Because of the ease that we can use scanning for candlestick signals and patterns, I don't want to be limiting myself to 10 trading stocks. I want to be taking the whole universe of stocks out there. It's very easy to go and do scans in less than 20 minutes each day and come up with the best 2 or 3 trades for the next day, just based upon the visual charts. How do you decide which stocks to trade? A lot of stock candlestick pattern setup. What is your top 3 decisions criteria? First, which ones have the strongest signals? Secondly, is it confirmed by bouncing off a moving average or through a resistance level? And third, what is my upside potential? There's a lot of good-looking stocks that have a 7% upside potential. I'd rather be in the one that has a 30% upside potential. What's my upside potential? Analyzing where the next resistance level is. So if I'm looking at a chart like this, where's my next resistance level? Probably up here, so that gives me a good percentage move. Strongest signals are the kicker signal, your best friend, which is the doji, followed by a gap up. Doji left-right combo, a doji followed by a bullish engulfing signal. We've got a video somewhere on the site that kind of quantifies which ones are the strongest ones. Do you buy mostly in the morning on confirmations and sell mostly in the afternoon without confirmations? Pretty much, Ernie. I would say 80% of my trades are done within the first 45 minutes of a trading day. Probably 15% are done at the last 20 minutes of a trading day, and 5% may be during the day sometime. What strike price and expiration? Well, right now, I've got spreads on, and I've got some open calls on MNLX, only because I think the magnitude of the move. Plus, we can analyze where upside potential is, approximately $50. So you can set up your spreads by knowing what your upside potential is, and if that adds to the math of your spread, it just gets you much better leverage. Also draw a line from the top of the highest green candle. All right. Which do you consider have precedence, MAs or support and resistance? It doesn't really matter, because that's going to be the moving averages will probably be your support and resistance. If you're a major money manager and you're buying right here, where do you think your next profit target will be? Probably up here. So if I'm buying here, people say, well, where do you think it can go to? I usually say watch to see what it does once it gets to this level. Why do I say watch to see when it gets to that level? Because we've got the visual capability of seeing if it does a doji, a shooting star, something that tells you that they're taking profits at that level. How long do I typically hold? I'm pretty much a swing trader, which means my average trade is usually somewhere between 2 and 10 trading days, depending on what the market conditions are. Yes, Clyde, these sessions are recorded, so yeah, and you go to the members area usually the next day, and you'll find the recording. Do you hedge your stocks with options? Not necessarily, Ninda. No, I've got the capabilities of seeing which direction the market's going and which individual stocks are going. So I want to take advantage of that information. So I'm not trying to hedge anything. Tammy, the three strongest is the kicker signal, the best friend, a doji, followed by a gap up, especially in the oversold area. Then you've got the doji followed by the bullish engulfing signal in the oversold area. That's your left-right combo. But then you also have breakouts from your J-hook pattern, from your fry pan bottom, your cradle pattern. How do you differentiate a slow curve, pullback, indecision, and soggy? A slow curve usually is a slow curve. It doesn't show any real decisive hard selling. And it shows it slowly coming back up again. If stochastics have been in the overbought area for some time, but the T-line is still going up, would you go long on a J-hook pattern? Yes. Remember, you're buying the pattern. Stochastics just tell you where you are, but the signal and the pattern is what you're buying or selling. RV, no, I usually don't trade pre-market or post-market just because of the volume. The volume gets pretty thin. MLX earnings on 10/23, trading down in last three. Traded down in last three. That could be, I may not own it until the 23rd, but I'll own it until I see a sell signal. How to use the 3T for entry and exit. Usually for exit, if you've moved a good distance away from the T line, and we're going to go through a whole evening of that here fairly soon. Again, using the 3T, the T line, and also combining the 1 minute, 5 minute, 10 minute entry and exit strategies. Okay, with that, Jim, go ahead and do the double line. Oh, there it goes. And Jim, go ahead and do the second double line. All right. All right, I got to wait for everything to stop scrolling. All right. Okay. SSH. Whoops. SSH. S.SSH. Here's that slow curve. You're still kind of stuck in a trend or a downward trend channel, but you've had a buy signal, that little kind of a doji gap up through the T line. If you own it, you stay with it as long as it stays above the T line, but it needs to open positive and trade positive. If it started trading back below the T line, that tells me this trend channel is still in progress. Potash also is in a sideways trend. I wouldn't be long or short this one until it breaks out one way or the other. And DB, S.DB. This one, it looks like it's trying to come back. There's your abandoned baby up there. If they open this lower tomorrow, you close out the position because at least they're coming back to the T line. But remember, an abandoned baby is a very strong trade. But if this is if it's a ADS, you're usually going to get more choppy charts. FSUN, there's your bullish Harami gap up, then your breakout through this level. You're probably still in this uptrend. So I would hold this. Well, if it opens lower, you know it's going to come back to the T line. So if you close it, you just have a buy stop back where it opened. Comes back up through there after hitting the T line. You can always buy it back. This one did not close below the T line, but notice it came back and did a doji, which means it's indecisive, but very simple. It needs to open positive and trade positive to stay in it. Now, you're still stochastics heading up slowly, and you did a gap up through the T line. So as long as this stays above the T line, you can stay with it. DVD also stayed up above the T line. Very simple. You stay with this as long as it stays above the T line. What's it usually do to, if it comes up through a resistance level, you usually come back to test it and see if it's going to act as support. FLTX got soggy today, but it's still up above the T line, so I wouldn't be too surprised to see it do a J-hook pattern. If it bounces back up off the T line, doing a kind of a J-hook, where's our next likely target? Up here at the 50. And CTIC. This one has to open positive tomorrow. If this opens negative below the T line, this told you they failed getting up through this wedge, that they're probably backing it off some. And in the video, in the class, are the T lines still available? I think so, DJ. I think everything's that's been recorded is somewhere on the members area. That's light crude, S.CLF. That's still S.CLF. There we go. All right, so this is still in an uptrend, not very strong, but notice it did break through, or it's right here at this resistance level. It did break through the 200. So you can be buying this on a positive open. If it opens negative, it's coming back to the 200 to see if it's going to act as support. By that time, the T line will have caught up. PDR. This one, slow curve, closed above the 200. If it opens positive, you can be buying it. I'd then use the 200 as my stop. The reason for that, if it opens positive, what's it doing? It's basically breaking out. If it comes back and closes below the 200, where is it? It's back into the congestion area below the 200. You want to be back out of it. Facebook. All you can do here is stay long as it stays above the T line. LNG. Same scenario. Stay long. As long as it stays above the T line. And what do you think about a doji at top of a channel for the SPY today. You need to see it confirmed. I wouldn't want to see it. If it trades back, if tomorrow it opens weaker, it means they're going to come back and test the T-line. So there's a good chance to see some profit taking in here, but I think it would just be profit taking because there's still a lot of potential for the target to be up at the where the Dow can hit the top of the trend channel again. What was this call? How long to stay in? November 5 call. Oh, until you see a sell signal. An option trade is nothing more than analyzing the underlying stock. You buy the calls. That's just a different method of buying the stock. So I'm going to stay long until I see a sell signal. XTEX, nice big breakout. I wouldn't be surprised if it does a 45 degree from this level, which would be somewhat kind of the same trajectory it's coming off of here. And ONVO was another one that needed to open positive and trade positive to stay in it. Which it did. It broke out. I mean, it kind of had a wedge formation. It broke out yesterday, but came back. Didn't quite get into the wedge formation, so it needed to see a bullish trading, which we had a bullish Harami. Makes this very simple. If it opens positive, you want to be buying. If it opens negative, you close out the position and wait for the next buy signal. TQNT, another rounding bottom, slow curve, right at the breakout area. If this opens positive, you can see it's going to be breaking this trend channel. Big, slow fry pan bottom type pattern. If you own it, you just stay long on this one. SYRG. I'd be buying this on positive trading. This is what this little doji tells you exactly what's happened when it got back to the T line. Indecision, and this told you that the indecision's now been made to go higher. And CRM. This one you stay long. And notice how far away you've moved from the T line. This is where you probably now use the 3T as your decision maker. Cores, another one that's getting ready to break out. I'd rather buy it knowing that it broke out through this level. Let's see, we did TiVo. Hello, Peggy. ISIL. Oh, those are odd-looking trades, but those are belt holds. If those are the true trades, be ready to buy this on positive trading, because essentially what these tell you is that they took out a lot of sellers and the bulls come stepping right back in. I wouldn't be afraid to be buying this one on positive trading. And Neon. This one's got the doji sandwich that took you right through this resistance level and through the 50. It's still going to go higher. Just kind of a after effect of a doji sandwich is more upside. There's your bullish Harami. This is pretty close enough to the breakout area that if it opens positive, it tells you that, again, this becomes wave one from wherever you want to pick. That you can see there was a bottom, so I'd pick right here. There's the top. That's wave one. If this breaks out, wave three is going to be the same equivalent as wave one. Click had a nice strong chart. There's the gap up, breakout through the resistance. Started with a bullish Harami, gap up through this little resistance level. Then this is pretty much what it tells you. There was some profit taking. Yesterday the profit taking was over. Yesterday, what is today? Monday. Friday the profit taking was over. This tells us there's more upside. So here's wave one, wave two, J-hook pattern going into wave three. And ABTL. Stay long on this one. Remember, the bigger the signal, there's your left-right combo. The bigger the signal, the more convincing it is there's been a change of investor sentiment. Where does that put you? Right back up here in this trend channel. I would expect a 45 degree to come off of here. And GTN, stay long on this one, as long as it stays above the T line. See, we did FU, which is also stay with it as long as it stays above the T line. Did we do FLTX? Yeah, this one needs to use the T line as your stop. Shouldn't close below the T line. TRV, kicker type signal, not quite a kicker signal, but strong enough to tell you. And there's your trend kicker right there. This one you stay long until you see a confirmed sell signal. Let's see, that was TRV. BTUS didn't do too much today. BTUS. Stayed above the T line. Notice it has also got a wedge setting up. As long as it stays above the T line, you stay with it. But I'd be ready to buy it again if it broke through this downtrending channel. And meat. This is the type. Here's your big move. Notice where it moved back to, right smack dab to the 200. That's where, if I saw it trading right here, that's where I'd flip to my 10-minute chart and see if they're going to take it right back up again. There's always consolidation after a big move. So if you get real aggressive, you can use the 10-minute chart to get you back or get in at a pullback level. That's where you can buy right at the exact time when it's starting to come back up again. T-Lab broke out today. Very simple. If this opens positive, you buy immediately because you're going to move in the direction how they open it after a doji, and you've already gapped up through the resistance level. Means the buyers are still there. Tesla got a little bit soggy today, which means they're coming back to test the the 50 the second time. So it better hold here. If it doesn't, that means there's more downside potential. How did this thing get out here? Amazon, same scenario. Stay long on this one because this is a big gap up. You're probably going to be in this trajectory of 45 to the upside. Baidu. This one you want to see open positive and trade positive also, getting back into the 45-degree trajectory after the gap up. So we did FLTX. VISN, I wouldn't be afraid to be buying this one. Remember, this was a message. That meant somebody was trying to get in here with great enthusiasm, profit taking. Now they're starting back up. That means this enthusiasm will start kicking back in. I think we measured out that wave 3
exponential moving
could
average.
take you up into the $19 range. HSOL, all you can do here is stay long. At this point, I would use today's low as my stop. If it started trending back down here, that tells me this upward trajectory, looks like it's starting to lose steam. It's starting to sell off. So if it came back down through today's low, it would also be coming back down after a doji, back down through the T line. You want to close out the position. AMRN. You can be buying this one, but this isn't the type of chart you'd like until you get more illustration of what the bulls and the bears are doing. Let's see, Lope. Lope has been a nice steady uptrend. All you can do here is stay long until you see a BCOV. Had kind of a dark cloud, but you didn't close even below the 3T. However, if this opens lower tomorrow, you're going to be confirming your dark cloud, which means you're probably coming back down to test the T line. So this one needs to open higher and trade higher to stay in it. Apple, doing the obvious. Here's that little kind of resistance level. They've gapped up through it twice. This one, all you can do is stay long. At this point, if I own the stock, I'd have my sell stop right here at the previous day's open. It shouldn't come back down through there. NXPI. The gold stocks, is this a gold stock? No, this is semiconductor. Here's another one, Doji, right on the resistance level. Makes it very simple. If they open this positive, that resistance level is not holding anymore. You're going into wave 3. So wave 3 to me is starting wherever I can see a bottom. This looks like a bottom, a bullish harami right on the 50. Wave 1, wave 2, right back to the 50. Wave 3 should be the same magnitude as this. Now, does it mean it's going to be? Not necessarily, but the J-hook patterns are pretty consistent, number one. Number two, we stay in the uptrend until we see a sell signal. The sell signal is much more important than what the target expectation is. Again, that's the whole point of learning what the signals tell you, is when the bulls and the bears are taking control. Sometimes that's at the target. Sometimes it's way before the target. Sometimes it's way after the target. So use the signal as your top priority of when to get in. Now, GDX, that's slowly moving up because you had a little kicker type signal that took you up through the resistance level. You stay long on this one until you see a sell signal. And I did Apple, a lot of gold might have patterns, like GDX. Yeah. Ego, EGO. Yeah. Yeah, even though gold is not doing very well, somebody's buying those stocks. XIV, the VIX has got a left-right combo. So if it opens lower, especially if it trades down through the lows, that means they're coming back down to the T line. LVLT needed to open positive today to do that doji sandwich breakout. It didn't. So you shouldn't have gotten into this, or if you were in it already, you should have been out, because that's basically an evening star signal closing below the T line. IEP. Whoops. S.IEP. There's that slow curve breakout. All you can do here is stay long, put your sell stop right here. If it opens positive and trades positive, then you'd put your stop at the open of tomorrow. We did FLTX, DXYN. Bullish engulfing. This one you can be buying on positive trading. It's kind of a left-right combo, but you got two bullish engulfings. You've closed right at the 50. So if they open up positive, they're trading at positive, and if they can break out through this level, you've got more upside. RSOL. Getting a little bit toppy up here. I wouldn't want to see it trade back below today's low. It needs to open and trade higher. If it came back down through this area, that tells you they're still selling, probably coming back down to the T line. What is that, VIP?
That YM. ATR at highest value in past 10 bars on 20-minute chart for
stay
YM.
long until you see a sell signal. Let's see, another one we made some good money with was VIPS, because it came out of a fry pan bottom and it wouldn't stay below the T line. So this one's been a good acting kind of wave 1, wave 2, wave 3, bigger than, well, it might not be big. Let me see where wave. Yeah, so if that's wave 1, wave 3, probably a little bit bigger than wave 1 right now. TBT. This, you probably want to stay short until you see a buy signal. Notice your bearish engulfing right here. This is called the blue ice failure, where they've fallen through the ice. They've come back up to see if they can find the hole they fell through. They can't. They drowned. It means they're going down to the 200-day moving average. Occidental. There's a hanging man, doji. This one has to open positive and trade positive to stay in it. If they open this lower, that's your huge evening star signal, bearish hanging man confirmation. It has to open positive and trade positive, staying above the T line. If it comes back down through the T line after that type of reversal signal, I'd be out of the trade. Let's see, Deere. Deere is one that I wouldn't be long or short. Number one, you're still caught in this channel, even though you've got kind of a scoop pattern. But even if they created a slingshot effect here, it still has only about a 4% move to the upside. There's much better charts to be trading. Let's see. ACAD got whacked. No, not whacked. Failed at the 20, closed right on the 50. It closed below the T line, which means you should be out of it. Now, if they open this lower tomorrow, you're going to have a bearish J-hook pattern. Gives you the potential of seeing it come down to the 200-day moving average. So that would be a good short. This is a short, wave 1, wave 2. Notice how it stayed above the 50 and couldn't get above the T line. Tells us that more than likely, if this is wave 1, wave 3 could take you down to the 200-day moving average. And let's see, did we do GNW earlier? This all you can do with this one is stay long using the today's open as your stop. IVAC. That's a bullish engulfing after a doji, hammer. This one you can buy on a positive open because you got the bullish signal. If it opens positive, you can be buying with the anticipation your next target is up here at the 50 and just use the T line as your stop. How do you combine 3-minute and 5-minute? RK, that's a whole session and so on. We'll get to that here pretty soon. ACN starting back up, a little doji sandwich, closed right at the 50, makes this very simple. Notice how they start gapping this up. Told you somebody's coming back into this with force, right about the same level they bottomed it out before. I would suspect if they can get through the 50, they'll probably get through the 200, meaning this would be your upside target up in this range. Go back with a 5-10 minute on ISIL. All right, let's try that. ISIL. All right, let's see what those charts look like. This is the 5-minute chart. Let's go to the 10-minute chart. That was a couple of days ago. So that belt hold was right. But the belt hold today doesn't look right. That may be more of a bad tick. So anyways, now this is a case where you prefer to have 2 or 3 different chart services so you can see if they're all confirming with each other. VEEV, new issue, can't help you there. Right now, you can just stay long as it stays above the T line. Let's see, KR, is that Kroger? Kroger, you can stay long, but again, this is an institutional trader, so you have to just be aware of what your lack of magnitude of return is. But right now, if I owned it, I'd continue to own it as long as it stays above the T line. And S.CL. Colgate, another institutional trade that I probably wouldn't fool with. If you're in it, you can just stay long as it stays above the T line. I think didn't we do CFL or CLF? Yeah, this one you definitely want to be buying on a positive open. Carnival. Carnival you can be buying, but your first target, fill in this gap. Secondly would be the 50-day moving average. If it breaks through there, then you can fill this gap up here. Again, not a big percent price move. All right. Thanks, Linda. Okay, Caterpillar. Caterpillar, another one that I wouldn't be too happy about buying based upon its lack of returns. But as you can see, you're caught in a sideways channel. You did do a doji sandwich potential. So if they do break this to the upside, breaking out through this downward top, then you can be buying. But just still be aware that the magnitude of return isn't going to be all that splendid. When you say all you can do is stay long until it close below the T line, does that mean to let it get in if you don't own it already? No, that means you hold. You wouldn't be buying here, but if you owned it, you stay long. So there'll be a lot of times where I'll say I'd be buying this one, or hold this until you see a sell signal. There's times where even though they're moving up, you wouldn't be buying it anymore because your upside potential gets diminished. So, yeah, so there's a difference. Continue to hold until you see a sell signal, or this one looks like a good buy. Yelp, all you can do here is stay long until you see a sell signal. Soda, it's not a chart that I'd either be long or short. There's nothing there. All right, Peg of the Lake, good luck tonight. Did I skip BBD? I think we did it earlier, but BBD, another one where you can stay long. It came back. Oh, we did this one. Came back, looked to see if the 200 was going to act as support. There's this one, better open higher. You don't want to see it close below the T line and the 200. Yelp, a dark cloud.
That YM. ATR at highest value in past 10
yeah,
but
you've had sell signals in here before, well, and you're right there at the T line. So you don't want to see this trade back below the T line. That's more of a bearish engulfing signal than a dark cloud. So if this opened lower and started trading below the T line, I'd probably close out the position. You can always buy it back if it came back up through the T line. Well, bad ticks distort the indicator. Usually one bad tick won't wreck the indicators all that much at all. There's a gap up, bearish engulfing. Where did it occur? Right smack dab on the resistance level. If this one opens lower, you want to close out the position for two reasons. Because if a trade closes below the T line, you want to be out of it, number one. And number two, the trajectory of your trend isn't going to be very enthusiastic. Okay, Roger. All right. Bad dog, no barking. Nah. Okay. All right. Whoops. What's your opinion of the Ichimoku charts? I don't use them. The T line is probably the best, most effective trend indicator. You can use them. I mean, there's nothing wrong with using an indicator, but again, I use my candlestick signals as my top indicators. Then I add everything else to kind of confirm what I'm doing. Let's see, what was I doing? Cena. Oh, we did that. So we did GOL, right? S.FE. Whoops, something's happened here. Whoops. S.FE. Another one that needs to break out through this wedge. So if this opened positive, yeah, you could be buying with the anticipation now that 200 is going to be the next target. How do you scan for these J-hook setups? on TradeStation. Ronnie, that's a question you want to ask in the chat room during the day. You got a lot of people with TradeStation that can help you with that much better than I can. GNW, just stay long. Bank of America, stay long as it stays above the T line. And Yahoo, we did. As long as this stays, if this breaks out through here, now you have wave 1, wave 2, wave 3. All right. VRTX, that'll be our last one. VRTX puts S.VRTX. No, I wouldn't be shorting this one right now, because you pretty much can tell where your downside potential is right here at the 200. That's not, I mean, you could buy puts, but it'd be a very short-term trade if it came back down here. So we're more interested in finding something where it finally breaks through an uptrending channel. You are in a downtrend, so I probably should qualify that by saying, yes, you can buy the puts, but watch the 200 as your support. All right. Guess with that, everybody, we'll see you in the chat rooms tomorrow. You make me look smart to my wife. Huh? I am not that convincing to anybody. All right, we'll see you in the morning.